So let's proceed. Operating segment. Let's go back to our notes. We already did, I gave you some notes in our last class on Sunday. I did all the theory, so we have to start with an illustration. But before that, let's just do a recap. We just do a recap. Just go to a recap. Yeah, we said what's an operating segment? You see that an operating segment is a component of business which engages in business activities from which it may earn revenue and incur expenses. Yeah? So that it earns revenue, incur expenses, and its operations are regularly reviewed by the chief operating decision maker. That's what we call an operating segment. Then how do we identify a reportable segment? Identifying a reportable segment, we say that we have 4 criteria you can use to identify a reportable segment. Number one has been identified as per the definition. What's the definition of an operating segment? It's a component of business engaged in a business activity. That means it's earning revenue and incurring expenses, and whose operations are regularly reviewed by the chief operating decision maker. If you take a case of a branch sometimes qualifies to be a what? A segment. Why? If you take a scenario of a supermarket with a branch, does it qualify to be a segment? Yes, number one is earning its revenue, right? It incurs expense, and whose operations are regularly reviewed by the chief operating decision maker. Do you have a branch manager? Is that what we call the chief operating decision maker? So number one, you say that to identify a reportable segment has been identified as per the definition. Then number 2, has met the quantitative threshold. There were 3. That means its revenue should be at least 10% of the total segment revenue. Its profit, at least 10%. Its asset, at least 10%. Those are the 4 ways of how to identify a reportable segment. Then I gave you 2 approaches. What are some of the approaches of identifying reportable segment? There were 2. One was risk and return approach. I also gave you the advantages and disadvantages. Number 2, there was managerial approach. Which one do you remember? Number 1 was risk and return approach. Number 2 was actually risk and return approach. It's all about the quantitative threshold, risk and return. Then we say that at the managerial approach, it's upon the management to decide what qualifies to be a reportable segment. I also give you advantages and disadvantages. It's just a recap. I'm reminding you. Then also we looked at something else, the disclosure requirement or the content of a segment report. When presenting a segment report, what are some of the content? Content or the disclosure requirement. Number 1, we say this. Number 1 is the revenue. And we say that for the revenue, you have to show the external revenue as well as the intersegment. Then you also show the profit from the external sales, as well as the profit from the intersegment or internal sales. Intersegment. What else? Assets, liabilities, interest income, interest expense, depreciation, amortization, impairment, other expenses, other incomes. What else do we discuss? We also discussed about how do we reconcile the segment report. See that the item in the segment report will be reconciled to the financial statement. And you see that we reconcile 4 items. What do we reconcile? Number 1 is the revenue, profits, assets, and liability. We reconcile those 4 items. That means the segment revenue should reconcile with the total revenue shown in the statement of comprehensive income. The same as the profit. Assets and liability shown in the segment report should always reconcile with the item shown in the statement of financial position. Then you also looked at types of segments. types of segment. We say that there are two types of segments. Number one, there is service segment. We say that a service segment is a segment depending on the type of services or the products they are selling. Then number two, there was geographical. Geographical segment. What are the disclosure requirements of a geographical segment? Content of a geographical segment report. Do you have it? Or I didn't mention that. You know, I mean, I'm very good when it comes to memory. Eh? I remember dictating that. Actually, that was the last item. Eh? Say that when presenting the geographical segment report, you only show two elements. One was what? Non-current assets, as well as what? Revenue from external customers, right? Yeah, or external revenue. Yes, as simple as that. That's what we discussed in our last class. Now let's do an illustration. An illustration. June 2011, question 3. June 2011, question 3A. June 2011, question 3A. Now I've shared the past paper 4 times. Eh? Now I'm tired. So I won't share them again. Eh? Sorry? I remind my student. Sorry? Niwafanyia orientation waache kusumbua. Eh? By the way, we should. Eh? Yeah. We shall orient the online student. Yeah. For the physical, at least I can see them physically. I can see those who are struggling. Eh? But for the online, they should not worry. Now open that question, June 2011, question 3. Yeah, I can see almost 90%. They have printed them. Eh? Yeah, now that's good now. You can see now you're starting to follow the rules. Eh? You are starting to become serious now. Eh? June 2011, question 3. Eh? Margaret, you want to read for us? I'm asking. I didn't say you read for us. Eh? You know, you're looking at me like you want to say something. Eh? I'm a Maureen. Maureen, do you have the question paper in soft copy? So now let's read the question. Let's read the question. Part A, you are told that Platinum Group operates in the media industry, but some of its subsidiaries operates in the mobile technology and soft drink sectors. The management has identified reportable segment as print media, mobile technology, soft drink, and others. Yeah, so this company has identified 4 segments. And those are its operations from the print media, the one offering the mobile technology, soft drink, and others. So that means each has the power to earn revenue, to incur expenses, and then they have someone in charge to make critical decisions. The following is a summarized set of financial statements for the year ended that 1st of May, 2011. So we have the income statement, then we have the statement of financial position. Added information. Added information. Added information. Number one, you're told that for the purposes of preparing the segment report, the management has provided the following details from the income statement items. We have the 4 segments, We have their revenues, inter-segment revenues. We have the segment profit. Then we have inter-segment profit. Number 2, other details of income and expenses are as follows. We have other income, that's the interest. We have the interest expense, depreciation for PPE. Then we have amortization of intangible. Number 3, a summary analysis of assets and liability of the segment is given as follows. So we have the assets, then we have the liabilities. Number 4, the group also operates in several East African countries, and a summary of its financial information is given as follows. We read that again. The group also operates in several East African countries. Now, what is that? Now, that's what we call geographical segments, right? See that for geographical segment, what are some of the content? Only 2 items, non-current asset and what? Revenue, and that's what you are given. So you have the countries that Kenya, UG, Tanzania, Rwanda, others. Then you have the revenue and the non-current asset. So geographical segment report only shows 2 items. Required. A segment report for the group that will be presented in the notes to the financial statement for the year ended that 1st of May 2011. Number 2 is the reconciliation statement for revenue, profit or loss, total assets, and liability. I remember you said that you only reconcile 4 items: revenue, profit, assets, and liability. Let's present that. And now let's present that. How do you prepare segment report? So what's the name of the company? So then for the new student, kindly don't copy. I'll give you time to copy. We have Platinum Group, operating segment report for the year ended 31st of May 2011. Then we have various segments. So we have print media. Then we have mobile technology. Then we have soft drinks. Then we have others. Then you also need to reconcile. So reconciliation. And then you need to show the totals. So kindly don't copy. So now let's go to additional information number 1. Additional information number 1. I remember I gave you the content of a segment report. What do we show? So number 1, you are told that additional information number 1. For the purposes of preparing the segment report, the management has provided the following details from the income statement items. We have segment, we have revenue, inter-segment revenue, segment profit, inter-segment profit. So we start with the revenue. And you see that for the revenue, you have to show from the external customer or the external sales, as well as the internal or the inter-segment. revenue. And then you also need to show the total revenue. Then you also given the profit. Also for the profit, we have the external profit, the one emanated from the external sales, and then we have the intersegment. Then you show the total profit. So now let's start with the revenue. Revenue. So for print media, you are given the revenue. Now that's the total revenue. So print media, they recognize a revenue of 2250. Then mobile technology, 1600. Soft drink, 1150. Others, an amount of 500. That's the revenue recognized. Then you also given intersegment revenue. What do you mean by intersegment? That means there was interdepartment trading. There was what we call the transfer. So that means we have some products transferred from the print media to mobile technology. Since they are acting independently, any transaction will have to be recorded. So what was those intersegments? So print media was an amount of how much? 250. Mobile technology, the intersegment revenue is 100. Soft drink, an amount of 125, and others is an amount of 25. Good. Now, if print media recorded a revenue of 2250, of which 250 was intersegment within. So how much was external revenue? 2000. Good. Mobile technology recognized a revenue of 1600, of which 100 is what we call intergroup sales. So how much was the external sales? 1500. This one will be 1025. This one will be 475. I will do the same for the profit. Can you see the segment profit before tax? Print media, an amount of 750. Now that's the total. 750, 350, 200, and then you are given the intersegment profit. The profit within the group or from this intersegment revenue. Print media, the profit was 50. They had 25, 15, and 10. If print media made a profit of 750, of which 50 was intersegment, so how much was the external profit? 700. This one will be. This one will be. This one will be 140. Good. Number two. Other details of income and expenses are as follows. So we have other income, interest. So we have interest income. Print media is an amount of 100, 150 dash. So how much was the total interest income? It's an amount of 250. You take it to the total. Also, there was interest expense. For the interest expense was an amount of 50, 50, 30, 20, and the total is 150. Also, there was depreciation. An amount of 30, 20, 20, and 50 plus that, you get an amount of 80. Then there was amortization of intangibles. Print media was an amount of 20,555. A total of how much? That's right. Then note that this is not a financial statement. Are you together? It's just a report. So you don't have to show that because this is interest income, this is an expense, we show as a negative. This one is not a financial statement. You're only showing the amount. That depreciation from the print media department was an amount of 30, 20, 20, 10. Don't show them as a negative. It's just a report, it's not a financial statement. Number 3, a summary analysis of assets and liability of the assets of the segment is given as follows. So remember, assets and liability were among some of the content or element of the segment report. So we have assets. Print media, the total asset is 2,500. We have 1,500. We have 1,000. Then we have what? unallocated. Now, unallocated, these are assets serving all the segments. Are you together? Yes, for example, assuming they have a distribution lorries. That means that lorry belongs to the company. So it can distribute any of the product. That's what we call unallocated asset, the asset that belongs to the entire company. So we have unallocated assets. That one goes to the total, an amount of 500. So give me the total. That's 4,565. No, it's 6, eh? So how much is the total assets? 6, you add 5, eh? Yeah, so that's the total assets. We do the same for the liabilities. Also given the liabilities. Liabilities, we have 500. Then we have 750. We have 200. Then we have 300 and no. Still 200. Eh? Then 350 is for unallocated. So an allocated liability, that one goes to the total an amount of 350. So how much is the total? 12, 13, 14, 15, 16. That's 1650. Yeah? Now give me the total liability. Simple as that. That's how you present a segment report. So now let's reconcile. So that how many items do we reconcile? 4. One is what? Revenue, profit, asset, and liability. So that what's the reconciliation? This is where the item in the segment report should be reconciled so that to match with the item in the financial statement. That's the income statement and the statement of financial position. Now let's start with the assets. We have already adjusted our assets. How much is the total assets? Can you go to the statement of financial position? Let's go to the balance sheet of the entire company. How much is the total assets? 65. Good. So what's shown in the segment report should always reconcile with what we have in the statement of financial position. Total liabilities is 200. Is that correct? It's not, eh? Is that correct? Has your total liability 2,000? Are you sure it's 2,000? Good. Yeah, liability is made up of non-current and current liability. How much is the non-current liability? 500. What about current? 15 plus 5, you get 2,000. Good. Yeah, now let's reconcile now the income statement item, the revenue and the profit. Now this is where now I want you to reason. This is where now I want you to reason. So can you add the total revenue? Others to add the revenue from external sales, others to add inter-segment revenue. Others to add external, others inter-segment. Total is how much? 500. 5,000, eh? Let's start with the total. 5,000, right? You take it to the total. How much is inter-segment? 500. Now let's go back to financial reporting, consolidation. How do you account for intergroup sales? Do you remember intergroup sales consolidation? Eh? Yeah. No one was exempted financial reporting. Eh? And that's a mandatory question, consolidation or groups. How do you treat intersegment? Not intersegment, intergroup sales. Eh? 90% of you, I train them apart. Eh? How do you treat? Yes? You eliminate in full from? My good student. Eh? You eliminate intergroup sales in full. Where do you eliminate? From? Cost of sale, that's correct. And what? Closing stock. the revenue. Are you together? Actually, most of you did actually financial reporting last semester. That means it's 1 month or 2 months. And you don't remember. How will you survive data analytics? Let me give you a brief history. What's data analytics? Now, data analytics, it will test you all the unit you have ever done in CPA. Taxation, ICT, financial management, management accounting in just one paper. They are trying to adopt what we call the CBC. It's not about cramming. I was done with the file. I don't want to see consolidation. You'll get it in data analytics. Yes. Sorry? ICT is quite a shida. You'll be trained how to use Excel, how to do the analysis, ratio analysis, everything will be in data analytics. So now, for those who crammed, you'll have a hard time. So you better now try to make your memory retain that information. A little bit longer. How to get? Not just after 1 week you forget everything. Now this is what we are adjusting. So you're saying that intergroup sales are eliminated in full from both sales and cost of sales. Now this is what I mean in this case. External sales we have it's 5,000. You take it to the total. Intersegment we have it's 500. You reconcile. How do you reconcile? You eliminate. So what does that mean? Now, can someone add the total revenue for print media, mobile technology, soft drink, and others? Add the total. Now you're adding the total revenue. You're getting an amount of 50? Yeah, the total sales was 5,500, but you're saying that intergroup sales should be eliminated. So here for reconciliation for the total is 500, you eliminate. How much do you get? 55 minus 5, you'll get 5,000. Can you go to the income statement? Income statement of the company. How much was the revenue? 5,000. If you didn't understand that, can you reason for profit? It's the same process. So others to add the external profit, others to add intersegment. Intersegment is 100. That is 1350. Amma? Are you getting 1350? External profit is 1350. Where do you take external profit? You take it to the total, 1350. Then intersegment profit is an amount of 100. You eliminate. Now that's what we call unrealized profit. How do you account for unrealized profit? That for unrealized profit, you add it to the cost of sales, you eliminate from the closing stock. Is a profit which is still within the company. That's what we call unrealized profit. So can you add the total profit now? Add the total profit. 750, 350, 200, 150. The total profit is how much? 1450. But now you're saying that of that 1450, 100 is still within. So you eliminate. So you have the total, you eliminate this 100. What will you get? 1350. Good. Let's go to our income statement. How much is your profit before tax? Is it 1350? Yes. That's how you reconcile. The segment report item should always reconcile with what you have in your financial statement. So we have prepared the segment report and then we have reconciled. Also, we can even prepare the geographical segment report. Okay. Platinum Group. Now these are separate one. Now we are presenting about the geographical segment report. You say that for geographical segment report, you only show 2 items. The content is only 2 elements. What and what? Revenue from external customers and non-current assets. So here we have geographical segment report for the year ended 31st of May, 2011. Let's go to note number 4. Note number 4. In note number 4, you're told that the group also operates in several East African countries, and the summary of the financial information is given as follows. So you're given the countries of operation. We have Kenya, we have Uganda, we have Tanzania, we have Rwanda, then we have others. We have revenue, and then you're given the non-current assets. Revenue, we have 3,000, 5, 5, 4, 6. There we have 15, 1,000, 500 to 50 to 50. Now let's start the total. 3, 4, that's 5. 25, that is 35, right? 35, good. So the revenue is 5,000. How much was the external revenue? External revenue was 5? Non-current asset, let's go to the balance sheet. How much is the non-current asset? 35, good. Now you can copy. We do another illustration. December 2017, question 5. December 2017, question 5. Question 5B. Question 5B. Now let's start with the part A of the question. Highlight 6 examples of unethical behaviors by the management of business entities which professional accountants should report about. 6 marks. Highlight 6 examples of unethical behavior by the management of the business entities which professional accountants should report about. Who are we referring to? Who is a professional accountant? Yeah. You in future, eh? As a what now? You know, there is something I say that all the theory question in advanced level. First of all, you have to interpret the question before you answer. Like this one. Now, who is a professional accountant? Any accountant? I tend to disagree. Even if you are CPK, according to this, are you together? If you are CPK, you have completed section 6, you are professional accountant. Are you together? But according to this question, it's not a CPK. There is something I'm looking at. Sorry? ISPAC. Registered with ISPAC, Practicing accountant. There is a point there, but still don't get that. Now let's do the question again. Are you together? I said that this is advanced. Highlight 6 examples of unethical behavior by the management of the business entity, which professional accountants should report about. Number 1, that's why I want you to interpret. Sawa. It's just a statement, but you need to understand that statement. Unethical behavior by management. Who is management? An accountant. Is an accountant part of management? Yes. So you cannot report about yourself. Are you together? So you are reporting, that means it's something being committed by the management, including the directors. Directors are part of the money. So this is not even it's not an internal auditor. This is an external auditor. Is the one with the obligation sometime not always, sometimes to report to the external entity. And that's what we are looking at. Because we are told that about the management. Remember, internal auditor is part of the management. Are you together? Professional event finance manager, a CPAK, is still part of the management. So you cannot report to yourself. So in this case, we are talking about an external auditor. Now I have interpreted for you. Which are those unethical behavior? You as a professional, as an auditor, as an external auditor, committed by the management, you need to report. That means you are not reporting to the management. Are you together? Don't go and tell the directors. They are culprits. So that means you are reporting either to the shareholders or other external agencies such as ISPAC, EAC, EACC, KRA, DCI. Yeah. Which are those? You read that one in auditing, eh? Number one, non-disclosure. Non-disclosure, you just say the management. Tell the management that the accountant you have employed here was not well trained. Are you together? Even on compliance, you just tell them, you know, first of all, you question, who prepared this? You are not complying with the IAS. I'll just come up with a report if you have not complied. I will not report. That one I have no obligation to report to the external agencies. Tax evasion. Are you together? Tax evasion is a fraud. You don't report to them. Because, okay, who did the tax evasion? Is the management itself. Are you together? So that means you report to the external agencies. Number one is the tax evasion. Money laundering. Money laundering, wash. Actually, it's done by the directors. Are you together? So once you notice that there is wash going on, you don't report to them. You report to the external money laundering. What else? Embezzlement of funds. Not the 50,000 by an accountant. Go to the director. Director embezzle millions. The money that belongs to the shareholders. So in that case, you don't go and tell them directors. Now, I can see there's embezzlement of fund of 50 million. Go and tell the shareholders. Are you together? Illegal what? You have a point. Okay, we can say illegal operation, but when you say, okay, it's a point actually, but you have said money laundering is also an illegal word. But that one is totally different, to be honest. Some illegal, you might be carrying some illegal transaction or illegal businesses. You know, money laundering is another thing. Do you know what's money laundering? Okay, you might not understand that. Do you know what's wash? Yeah, mnajua, should be having an idea what is wash. You know, you are the one who are hired. See wengine. They hire accountant. Accountant, you know, via the integration. Let me not teach you that. The integration process. What are some of the areas of money laundering? Input, layering and integrate. Yeah, najua venye inaenda kazi. Go and investigate some of the restaurants. Night clubs, car wash, most of the business in CBD. You see someone with a business, a boutique, no customer. No customer. But at the end of the day, 100K, you cannot question them. I have a business in CBD. Even a cloth for 5,000, you can even sell to 2,000. At least onekana alikuwa na customer. But at the end, some money is coming, going out. You have a restaurant. You invite your friends. Unajaa kwa crab. Watu wanaona hiyo crab inajanga. But you are the one paying for everything. Then you tell the accountant, 1 million, show it from our revenue. And it comes out as a clean source. And you pay, and you comply with even the taxes. No one will question you. Even the real estate nowadays, that's what's happening. Anyway, that one you should report about. Money laundering, etc. Good. Now let's go to part B. With reference to IFRS 8, operating segments, Outline for disclosure requirement for a reportable segment with reference to IFRS 8 operating segment. Outline for disclosure requirement for a reportable segment. Don't go back to the notes. Disclosure requirement. Profit should be at least 10%. Revenue should be. You should not write. You already have them in your notes. Number 3. You have said profits, revenue. What else? Assets. Number 4. Has met the definition, right? Yeah, very wrong. Yeah, that's very wrong. Now, the question is not asking about how to identify a reportable segment. It's asking about the disclosure requirement. What do we disclose in the segment report? A revenue, profits, assets, liabilities, depreciation. Hakuna non-current asset. So I gave you the disclosure requirement or the content or the element of a segment report. That's what it's asking. What do we disclose in the segment report? The question is totally different from how to identify a reportable segment. Number 2 of the question. The following information was obtained from the financial record of Superfood Group for the year ended that 1st of October 2017. So we have the consolidated income statement. Then we have the statement of financial position. Now let's go to the added information. For management purposes, the business is organized. The business is organized into 5 operating segments: retail, catering, manufacturing, publishing, and others. Those are the segments. Details of the operating segments are provided below. We have the revenue, total revenue, and intersegment revenue. Then we have the profit. Now for the profit, you're only given the total. See, for the column of intersegment, there is nothing. So what does that mean? That means the management was not able to identify the specific the specific segment profit. But you're able to identify the external profit or the total profit. How do you adjust that? Number C, we have the segment assets and liability. Number 3, intersegment profit amounted to 42.23. Required segment report as far as the information provided above allows, according to IFRS 8 operating segment. So how do we prepare an operating segment? So this is Superfood. Kindly don't write. So for the year ended 31st of October 2017. So you have retail, you have catering, you have manufacturing, we have publishing, then we have others. Then we reconcile, then we get the total. We start with the revenue. Note number 2, you are given the revenue. For the revenue, we have the external revenue, as well as we have the intersegment. And then we have the total revenue. In note number 2, part A, we have the revenue, we have the total revenue. So retail, we have it 129,842. Catering, we have 66,853. Manufacturing, we have 39,495. Publishing, we have that 2. 306, and then we have 37,447. Then we are given the intersegment revenue. Retail dash, catering we had an amount of 74,65. Manufacturing we had 36,791. Publishing dash, and then we have 56,63. So retail, the total revenue was 129,842. There was no intersegment revenue. So that means all the total revenue was from external customers. Catering, the total was 66,853, of which intersegment was 74,65. So how much was external revenue? 59? 388. That 9,495 minus 36,791. That is 27,04. This will be that 2,306. That 7,447 you deduct 56,63. 784. Eh? Good. So others to add the external revenue, others to add for me the intersegment revenue. That's 9. What 919, eh? And what about the total? Sorry? This was the total. The total is how much? 256,020. Then how do we reconcile that? Now we see that for the intersegment, you reconcile by deducting. You eliminate the intergroup sale or intersegment sales. So that now when getting the total, 49,919, you get 25,620. For that means if you add the total revenue, then you eliminate the intergroup, you should get 256,024. Can you go to the income statement? First of all, you confirm from the income statement. Now to the income statement, we have the sales of goods, service revenue, rental income, then we have revenue. How much is the total revenue? 256,020. I should always reconcile. We do the same for the profit. Let's go to note number 2. I mean, note number 2, part B. Now, part B, you are given the operating profit. But for the operating profit, we only have for the total column. There was no intersegment profit. But remember, you see that for the profit, you show the external profit as well as the intersegment profit. But in this case, they would not be able to identify the specific segment profit. I mean, intersegment profit. So we just show the total. So we have 6887, 4716, 1283, 1169, and then we have that too. Add the total. Kindly add the total. $17? 339. 17, 339. But you are told that in note number 3. Now let's go to note number 3. Intersegment profit amounted to 4223. So they could not be able to identify specific segment profit, but you are given the total intersegment. So how do you adjust that? Yes, of the total, you eliminate that 4223. Can you eliminate that? You get 13,116. Eh? Good. Let's confirm that from the income statement. Let's go to the income statement. How much is your profit before tax? Is it the same 13,116? Yes, good. Part C, you also given information about the assets and liability. So let's start with the assets. For the assets retail, we have 50, 152, 45, 145. We have 24, 620. We have 14, 165. We have 23, 829. Then we have investment in associate. What is that? Yeah. A segment cannot, for example, retail department cannot buy another company. So you know what's an associate? When buying another company that you have a significant influence. So a segment cannot buy. It's only the entire company that can buy another So that means investment in associate, you treat it the way you treated an allocated asset. That one goes to the total. So investment in associate, that one is unallocated. That one affects only the totals, an amount of 760. So add for me the total assets. The total assets here. Sorry, 7, 9, 911. Then add 764. 670. Fine. That's your total assets. Then you also given information about liabilities. For liabilities, we have 14, 839. You have 9783. You have that 609, 4704, 34175. There was no unallocated. So add the total. 67,110, 67,110. Good. That's how you present the segment report, and we are done. So now you can copy. Now, for those who have joined for AFL, now we have already covered 2 topics. Also, there was other point, unethical behavior. Also, insider trading. Can see someone saying, what is insider trading? Actually, that one is a criminal offense. Yeah, and usually committed by the top management. So you have done 2 topics so far, share-based payment, and then we have also done operating segment. Yeah, money embezzlement, that's correct. Yeah, fraudulent activities, and rewarding golden handshake. Yeah, that's part of corruption, right? Golden handshake, You know what's golden handshake? It depends with the motive. Sometimes you can pay to the former directors, or alternatively, for a company to win a tender, they bribed. Yeah, also that one is a criminal offense. assignment. But first of all, you can open it. December 2014. December 2014, question 4C. December 2014, question 4C. So you're told that, let's read the question. Wema Group Limited is a distributor of 4 products, P1, P2, P3, and P4. The management of the group has identified each product as constituting a reporting segment, namely segment P1, segment P2, segment P3, and segment P4. The management has also identified the countries of operation as country C1, 2, 3, 4, and 5. Those are what we call the geographical segments. The following is a summarized set of financial statements for the group for the year ended 30th of September 2014. So we have the income statement, then we have the statement of financial position. Let's go to the additional information. Additional information. The total depreciation for PPE was 120 million. That's the total. A portion in the ratio of 1.5:2 is to 1.5:1 for product P1, P2, P3, P4. So how do you apportion that? Ratio is 1.5:2 is to 1.5:1. So you just add the total, that is 6. So for example, for P1 now, you'll take 1.5 divided by 6, you multiply by 120. Then you recognize that. Good. Number 2, details necessary for preparation of segment report in relation to the revenue and respective segment profit was follows. So we have the segment, we have the revenue, intersegment revenue, segment profit, intersegment profit. Number 3, we have other income and expenses was follows. There was other incomes, interest and commission, cost of finance, amortization of intangibles. Number 4, the summary of assets and liability of the segment were given below, so you have that. Then number 5, the following is a summary of financial information relating to the revenue and the non-current assets within the countries the group operates in. Given the revenue and the non-current assets, that's the geographical information. Required, with reference to IFRS 8 operating segment, prepare, number 1, a segment report for the group for the year ended 30th of September 2014. Then number 2, a reconciliation statement for revenue, profit or loss, total assets, and total liability. Can you be able to do that question? Yes. It's almost the same. The one we did first for June 2011. Sorry? Ratios. How do I do it? You see, you are told that you are portioned in the ratio of 1.5:2 is to 1.5 is to. So, Ruto. It's not point, is to. Good. That one is your assignment. So we can still do another illustration. Yes? Around the question? I can try another illustration. June 2012, question 4. June 2012, question 4, open that. June 2012, question 4. So kindly make an effort to print all those past papers together in your handout. I've been sharing them to the group for those who have joined our groups. If you haven't received them, that means you are not in one of our groups. Yeah, so you can call me if you want to be added. Question 4, let's start with part A. Part A, theories. IFRS 8 operating segment is based on the core principle that, are you not there? I can see you are settled. So you're told that IFRS 8 operating segment is based on the core principle that an entity shall disclose information to enable users of the financial statement to evaluate, is it the nature? The nature and the financial effects of the business activities in which it engages and the economic environment in which it operates. In light with this core principle, it is in light of this core principle that IFRS 8 requires the desegregation of the entity's financial statement into segments. Required. Define the term operating segment as used in IFRS 8. I didn't go to your notes. I have actually today, not what we defined last class. I've repeated that one like 4 or 5 times. What's an operating? And then you define as per IFRS 8. That's the standard. You see that, don't write. An operating segment is a component of business which engages in business activities from which it may earn revenue and incur expenses, and whose operations are regularly reviewed by the chief operating decision maker. What have you understood there? Expenses. It's a business, but you say it's a business component. Component means a part. Which engages in business activity from which it may earn revenue and incur what? Expenses. And its operations are regularly reviewed by the chief operating decision maker. Good. Number 2, describe the condition that an operating segment must meet for it to be deemed a reportable segment under IFRS 8. Sorry? Definition. These are my 10%. But this is how you answer. How do you identify? Number 1, you have said that has been identified as per the definition of IFRS 8. That means you know what definition means. Business, component of business, it's earning revenue, it's incurring expenses, all that. Then number 2, its revenue is at least 10% of the total segment's revenue. Profits the same, as well as the asset. At least 10%? 10%. Those are 6 marks. Now let's go to part B. Evaluate the advantages and limitations of the following approaches of identifying reportable segment. We discussed about the 2 approaches, risk and return. Did I give you the advantages and disadvantages? Yes. Also managerial approach. Also give you advantages and disadvantages. Good. Another 8 marks. 8 plus 6, you get 14 marks. So the only remaining marks is 6. So, you know now what happens? In computational unit, most of students cram computation. And I say my theory, but you see in this case, the computation has only 6 marks. The other 14, they are theories. So kind of don't ignore them. By now you should be knowing what's an operating segment. By definition, what's an operating segment? Yeah, what you are saying is correct. Let's go to part C. Part C, you are told that the following information was extracted from the books of Kerenga Limited for the year ended that 1st of March 2012. We have sales. So we have food products, plastic, pharmaceutical, and others. So that means they have 4 segments. Then we have expenses, other items, identifiable assets. Then we have the general assets. Additional information. Intersegment sales for the year ended that 1st of March 2012 were given as follows. Those are the intersegment sales. Number 2, operating profit include that 3 million on intersegment sales. Information about the intersegment expenses is not available. Required. Segmental financial information according to the requirement of IFRS 8 operating segment. How do we prepare that? Kerenga Limited. Operating segment for the year ended that 1st of March 2012. So we have food products. We have plastic, pharmaceutical, others. Then you can reconcile, and then we get the totals. So now let's start with revenue or the sales. Sales, we have external sales and intersegment. Then we get the total sales. Note number, okay, we are given that the sales for the food product. Now note this, you are given the segment of revenue. Don't assume that is external, are you together? So that's the revenue they recognize. That means it's the total. Food product was an amount of 55.50. Plastic. How much is that? 525. Pharmaceutical. This is 625. 625. This is 50. 56.50. Then pharmaceutical. 345. Others 162. Good. Now let's go to additional information number 1. Additional information number 1. Intersegment sales for the year ended that 1st of March 2012 was as follows. Food product was 55. Plastic was an amount of 72. Pharmaceutical we had 21, and then we had 7. Now let's get the external. You take total 56.50, you deduct that, you get 59.95, right? Sorry? 55.95, What about this? 625 you get? 550? What about this? 324. What about this? 155. Now let's do the necessary. Let's reconcile. Others toward the external revenue, others toward the intersegment. $66. That one goes to the total. What about the intersegment? 155. But the intersegment will eliminate. So here it will be 155, and here will be 66.27. So now in this case, you're not given the income statement to confirm whether it has reconciled. Then what else do we have? We are not given the profits, right? But now, one of the content, if the company is generating revenue, there must be a profit, right? Yes. But in this case, you are not given the profit. But we said one of the major content of a segment report is the revenue, also the profit. Are you together? Now, in this case, you're not given the profit, but you're given the expenses. Good. So you have the total sales, and we have expenses. If we deduct that, we get the operating profit. As simple as that. So food product, the expenses, we had an amount of 33. 33, 35, Or is how much? 35, Plastic, 425, Pharmaceutical, 222, and then others was an amount of 200. Now, can you give me the operating profit? You take the total sales, you minus the expenses to get the operating profit. This one is 2315. This one is 200. This is one. And this was negative 30, which is negative. Now let's add the total profit. Let's add the total profit. $2,600, right? Good. Now let's go to additional information number 2. Additional information number 2. Operating profit includes 33 million on the intersegment sales. So of the total, 33 is intersegment. So you eliminate 33. What do you get? 25? 67. Good. Then we have other items. Let's go to the other items. So what do you have to the other items? General operating expense. General. Will it affect the segments? It goes to the total. So there was general operating expenses, an amount of, we can show that. Then we have what? Income from investment, an amount of 132. And then there was interest expense. So the interest expense was an amount of 65. Since we are not given the profit, now we can get our adjusted profit or our net. Can just call it profit before tax, or just the adjusted profit. This was the total operating. Can you adjust this? Remember, you have only deducted the normal expenses. 2070? 2072. Good. Then we also have identifiable assets. So we have the information about the assets. We have 73, 20. Is it 23? Then we have 13, 20. Then we have 10, 1050, and then 665. Which one? The total. This one is 7320. Now add the total. $10,355. Any question? I know you have a question. If you have a question, ask the question. I'll answer. I have an answer for your question. Yes. I even know your question. Ask. Why? You're giving, sorry? They are different. There's no scenario. In case they are different, know that one is wrong. Because you see, when determining the revenue for the income statement, that's the revenue reported by specific segment. And the addition should always be correct. So if it doesn't balance, no, your adjustment was wrong. Yeah, because there is no way we can report, for example, let's take a scenario of assets. The total asset, assume it's 35 million. That's what's shown in the balance sheet. But if you add segmental assets, you get 20 million, then allocated 5 million. So that means the total is 25. But you see in the balance sheet, you have shown an amount of 35. Where are the other assets? You see, for you to get this total asset, you had included all the assets of the company. That means for each segment, and an allocated should always reconcile. So now you can copy, and that marks the end of operating segments. So there was general assets. I didn't see it. Let's add the general assets. The general assets, an amount of 722. Now give me then the total assets. You get 11? 0, 7, 7. Good. So now you can copy.